Hello everyone, welcome to the PivotBoss Monthly Market Outlook for January 2024 and for Q1 of 2024. Thank you for joining me here today. This is the first time we've done a monthly market outlook in at least a few months, so it's good to get back into it. Additionally, several charts to get to. One of the things I want to do to begin the year, and we'll get started here in a moment, is we'd like to kind of get an overview of how the year could start, how Q1 could progress, and what the key levels are. We'll look at various futures markets for that right out the bat. We'll also talk some crypto, including BTC and ETH. There's several stocks as well that I'm going to bring to the forefront later on that can provide some opportunities, both short-term and longer-term. And additionally, if there's any other stocks that you'd like me to take a look at here, please list them in the chat, whether you're joining us in the trading room, whether you're on the Zoom chat, whichever way it is, post it, and I'll be monitoring those locations. So if you have any questions, have any stocks or charts you'd like me to look at, please feel free to put it there in the chat. We'll get after it as soon as I can. So without further ado, we will go ahead and get started with our first monthly market outlook of 2024. Welcome to all of you. Hey Jennifer and hi Rose, welcome. Good to see you all. We're going to start with the ES right now. We're going to start with the ES. You'll notice right now I am in a weekly chart, so each of these bars are 1 week. So very high time frame, right? 10-year chart, 10-year volume profile, and you can see kind of what we've done here over the last several years. One of the things that we looked at heading into Q4 of last year, we mentioned in Q4 we could be looking at a checkmark quarter. A checkmark quarter where we drop first and rally into the end of the year. That's what we were looking for. And we were using our quarterly pivots. So these right here, these blue lines are the quarterly pivots, the quarterly PivotBoss pivots. Previous quarter's low, previous quarter's midpoint, the previous quarter's close, and the previous quarter's high, right there. So those are the four main pivots. Obviously you have your center pivot point and you have the top of the pivot range as well. So those are your three pivots of the pivot range. But one thing you'll notice again, what we were looking for heading into Q1 is, this is Q4. Here's Q4 or Q3. If I can get those Q's right, my apologies. What we were looking for heading into Q4 was taking out the lows of Q3 and then going outside Q3's range. And that's what we were looking for. We were looking for weakness in October for a buy. And what transpired was much more than we could have ever thought. The lift and continuation we saw. I mentioned to our traders multiple times that this check mark that we saw here is probably the biggest, baddest Q4 check mark we've seen on record. I mean, go try to find another one that's better. It's very difficult over the decades. It's a massive move, and especially at these prices, to get this much distance is tremendous. So, having said all that, and this is just the ES. If you look at the YM, for example, it's much more elongated, right? So, massive Q4 range, huge rally. So, what tends to happen after an outlier of expansion? You tend to see some compression. If you spent all your wheels right here going higher and you emptied the gas tank going up, you kind of got to need to sit there and digest that recent move. Sometimes it comes in the form of a pullback, bounce, and then you start building a range. Sometimes it just has to kind of jiggle back and forth a little bit until it gets that wider range going. But after all of this excitement in Q4, we were looking for a compression heading into Q1 of 2024. And that's what we're seeing currently. We're seeing a very narrow range at these highs. Again, these are weekly bars. This is this week's developing bar, last week's bar, That's the last week of 23 and the second to last week of 23. 4-week narrow range. And when you quantify it down here with the PivotBoss Advanced ADR indicator, it quantifies price range for you. You can see it's super compressed compared to the averages. The average 4-week range would be about 2,200 points as of right now. Is that that sounds crazy, but if you look at 4 weeks and look at the high and the low of those 4 weeks, the average lately has been about 2,200 points. That says a lot. And that says whenever we are ready to break out of this range, we could easily see 2,000 plus points of movement right away. Which way is it going to go? How's it going to play out? I think tomorrow, prior to the RTH Open with CPI inflation data on deck, that could start to give us a good pivot here to work with ahead. So compression to begin the year, especially following a tremendous checkmark rally. One thing we noticed last year was, especially with the YM, it also got a checkmark rally right here. That was tremendous. So last year, the YM had a huge Q4 range just like this year. So it's right there. And how did the YM start Q1? It started curiously compressed for multiple weeks. It was painful. We were wondering what was up with the YM to begin last year. But look at this range. 1 week, 2, 3, 4, 5, 6, 7 weeks. That's the first 7 weeks of the year were in this teeny little compression after an enormous Q4 rally. So the point is, we may be in a similar situation here right now, where after all this strength, we go mostly sideways early. I would say with a continued upward bias until we see a strong rejection. If we see a strong rejection, strong high tomorrow, then perhaps we start working on a swing move down. All of this action from 35.8 up to 37.8 or even higher is empty. It's empty trade right there. So you've pushed up, and at some point you may need to rotate back down and retrade through those prices. Very beautiful D-shaped profile here, etc. So what I'll be watching for tomorrow, CPI data. How does the market respond? We're closing on highs here today, or near highs, especially of the highs of the week so far. Do we explode to the upside tomorrow through the previous year's high? And then if so, how does the market respond? If we smash through that level and then fail back down, it could be pretty ominous. Look back here, for example. You're at resistance. This is the previous year's high. First week of the year, it smashes through that level and then fails. And that was our indication right away that we would drop back to the midpoint of the year and of the quarter. And it did that and then some. But we were looking for a rejection first week of the year. We got it that year. Over here, what are we going to get? 4 weeks sideways. Do we even get a rejection? How's that going to play out? So, unfortunately, this is not my favorite spot in the chart. I really struggled with putting together some candidates for today's session because a lot of the market looks like this. And I know I'm long-winded about this right now. We'll get on with it. But a lot of the market looks like this, where it is sitting at the highest highs of the last year plus. And now what? Are you supposed to buy these expensive highs and hope that it keeps on the momentum to the upside? That's tough. Instead, when you have a super wide quarterly range like this and you close at the extreme, the odds favor a rejection at the edge and a fall back into the range, maybe as deep as the midpoint. So it wouldn't surprise me if we fall back into the range somewhat and then maybe build out and try to move forward from there. To think we just explode to the upside and keep this party going, that might be a little far-fetched, but crazier things have happened. Crazier things have happened, and this market remains quite bullish without really any rejection. And so we're still waiting for that. So 4-week narrow range, I'm saying 2,000 points of expansion, but really it could be much more than that. It could be 25, 27, somewhere in that zone. It could be quite a bit. And we'll see which way we go. But if we get a strong move up, it could be a huge swing push down to create an impulse move now, and we get ourselves a new key range. We'll see how that plays out. But right now, I would just it's a little cautious up here. Look at the previous high right there. Very strong pivot high, and then price dropped to this pivot low, and now we've rallied all the way through that pivot high, and we're up here on a higher high. You know, it kind of looks like a large developing M pattern or a higher high fade where it can actually, does it drop all the way back within the large 4-year range? You know, so this high right there I think is going to be very important. That's 36.8. If we fall quite a bit below there, we might be trapped inside this range again. So I don't want to pour cold water on the fire here or whatever, but I don't like to be too aggressive at these edges after that much strength. So that's just a word of caution from that perspective. And compression up here doesn't really say anything about directional conviction. So while we are compressed and we do see easily 2,000 points of movement coming up ahead, it doesn't say which direction. And right now everything's flowing up. I mean, what if we slam down, put a strong low in? We could be rallying to 2,000 points. So we just got to see which way, how we come out of this range, and it could provide a pretty solid move. That's the YM. You know, the ES looks very similar. ES looks very similar, but this one is right at the kind of the M top, if you will. So you have the portion up. That's the top of the range. You got the move down to the bottom of the M, then you get the move up to the range, and now we're here. Do we break out of this massive range when it's been a 1, 2, 3 years in development? Do we stay in the range? Do we drop to the bottom? Do we trade in the upper half here and then maybe try expansion? It's just, again, we're so at the extreme. I would just caution a little bit on being too aggressively bullish up here, just in case we get that reaction where we fall back. Again, another multi-week narrow range. This one is suggesting somewhere in the 350 to 400 point move range. You know, if you're moving 350 points, 400 points, that's a lot for this market. You know, to fall through 4,700 and drop 400 points puts you to 4,300, for example. It's a good level on the chart. Not bad at all. I mean, but that's the type of move that is building up in this tiny little, 4 or 5 week range. So it's quite a bit of action that could be in play. And if we get a strong high, for example, what if we push up to 4,900 and fail? Then we're looking at 4,900 minus 400 points, and it could be just an easy move back to 4,500. You know, something like this. So quantifying the next several weeks. That's basically what we're down to here, since we have a 4 or 5 week narrow range. If Thursday, Friday with CPI, PPI data provides a catalyst, maybe the next 3 to 4 weeks provides about 350 to 400 points of range. That would be the high end right now. You don't really see much more beyond that. These were 400 plus points, and that was massive. So that's way bigger than normal. So 300, 350, 400 points, somewhere in that zone. Once we get going, we'll see how it develops here. Again, at the top of this range, you just got to be careful. And for example, real quickly, my PivotBoss pivots are about as easy as they get in terms of identifying the best levels on the chart to do business. There's no hidden fancy formulas behind them. It's basically, here's your previous low, here's your previous high. That's the midpoint. And that's the high of the quarter, and you close near the low of the quarter. Well, usually we're going to be looking for a reaction that sends us back up the range. This is no different. We're at the edge of a large quarter. We could be looking for a fade back in. And you see that from time to time. Look at this quarter back here, closes near the low, rejection, and you rally back in the quarter. It just tends to happen that way a lot of the time, but not always. And this is not always perfect, but similar, right? All right. ES, 350, 400 points of range, perhaps. The YM is easily working with 2,000 plus points. The NQ right now, similar, a little bit wider range action, especially with last week's selling pressure, but still in the range. This week was a roll right back up last week's range, and you're still kind of in that 4 or 5 week range. You can see down here about 62% of average, so compressed, 1,500, 1,600 points of range. That's pretty big if we can get it. When I look at ADR and look at average range, for example, you do want to look at most recent personality of the market. I'm not judging this current action by 2022 over here, because that was way different volatility, and you can see the volatility here. And in 23, with bullish directional conviction, lower volatility for the most part, but still up, and still bigger volatility than what we saw back here. So 3 different years, 3 different volatility profiles. So I'm not really concerned with this over here. I'm looking at kind of last year to date, from back here over. And from that perspective, what we're looking at is about 2,000 points of range on the high end. 2,000, 2,000, 2,000, 2,000 on the high end. And that is on a 4 week range basis. So 1 week, 2 weeks, 3 weeks, 4 weeks. This is probably actually 5. So we can probably put a good 5 week range. Let's do that, by the way. Let's just update that, make it one more. And now we'll get a little greedy with how big of a forecasted amount we can work with. So now when you look at the stage here, it's similar. Here's a 5 week narrow range. You're still clearly compressed here, below 1,000 points. That's another thing. When you look at this right here, 900 plus points, and you bring it back, it's about as compressed as it gets. It was compressed there, a little compressed there, compressed in here. You got a little bit there, right at the threshold here. So compression here, and you get that expansion. Compression here, expansion. This was a little rise, but this was much better, and that's what we're looking for. If this is a 5 week range, then you're going to give it 5 weeks to go get that range. And the high end, again, is about 2,000. You can get a little bit more now that we added a week, but about 2,000. Are we expecting a full 2,000? Should we expect? When you go to the highest end of the watermark, I don't know if that's an expectation. It's just the high end of your target zone. So as much as 2,000 points, but I would shoot for a little bit of a range at and just below that level. So maybe 1,750 to 2,000 points of range up ahead. That's very doable. If you look at the average right here, this little average line, that average line is 1,500. That's an average. So it should easily get that average once it gets expansion. Can we go up there and get 1,750 to 2,000? So on a 5 week basis here, huge potential movement coming. What makes me a little nervous is how this is developing. And again, I know I'm stuck in the weekly charts here. It's just the beginning of the year, trying to give some longer term view on it and kind of a bird's eye view. This is 10.5, and you rally up to that pivot right here. That's your highest high. Then you drop back to 10.5, and then you rally back to and through that pivot. And now you form this box right here at this high. Again, maybe. Hey, Sammer, good to see you. Maybe this thing expands. Again, and it's a me thing, as I say in the trading room. if we've just gone all the way this way, from week 1 of last year to week 52 of last year, going from the lowest low to the highest high of the year in a straight line that's not 45 degrees, more like, what is that, 60 or more, my expectation is not for more expansion and upside. My expectation is not for more massive continuation or volatility. My expectation would normally be for compression and maybe backfill. That's just an expectation. Again, I know this is tough, and I'm mentioning how difficult it is at these edges here. For me, it's hard to buy highs when it looks like this. You got this range right here. You kind of have this little range similarly right there. And as soon as it's able to fail at that low end of the range, good night. Good night. And we may trade another few weeks in this range. And as soon as it's able to give it up, good night. And where are we headed to? You have an LVN here. You have a previous low there, quarterly low. You got your finishing yearly VWAP back here. That could be a massive move down if it were to take place. I don't know if we go all the way back that way, but that's in play. You wouldn't normally say it's going to do that all the way to the low. You do it in stages. You go here first. Maybe you mess around, and if you break there, then you go the next phase. It's kind of how it did last time, too. Man, it's just a little heavy up here. But these markets are showing some strength. When you look at some of these stocks, and we'll look at some, there's a lot that have accumulated on lows for a year and a half and are now starting to break out. Some of these may be ready to go. Meanwhile, there's others that have done this and are sitting at these highs. You know, you look at something like Meta, tripling last year, sitting on the highs. Is that going to keep going, or is that time for this one to consolidate while these take the reins? That's going to be something to keep in mind. Do we see some profit taking in bigger issues, and it goes to something that's been lower? And we'll look at some of those candidates up ahead. Okay, let's talk RTY. RTY has been, this one was significant. Oh, very good question there, by the way, by Vito. Can you look at previous election years if you feel it's important? Yeah, previous election years will be very important to what we do here moving forward. Usually election years, it was 20, right? 2020 was election year? Which one's 2020? I think this COVID one is. That was an outlier year because COVID, I believe, right? And then you had 18 before it. Yeah, we need to go back and look. One of the things about election years, you tend to see maybe, and we'll look at, I want to see if I can do some seasonality on just those years, but there can tend to be some strength and optimism, followed by a lot of compression in the middle part of the year here, where you're kind of in the summer doldrums and it's just waiting ahead of September, October, November, where then you start to see some movement. And election day, especially if you change hands from one party to the next, there can tend to be very bullish implications, especially if you go from D to R. In an election year, you tend to see strength just from that very bit of info, because this may mean less regulations and less this and this and that, less red tape, and let's do some business. And then you start to see that kind of strength come in. In 16, you know, RTY is not giving me all that data. In 16 over here, was it 16? I need to look here. Oh, there it is. JP coming in hot. JP bringing in the a great, I'm going to pinboard that to our trading room pinboard, by the way. Market charts of presidential election years. The Biden-Trump one was a big one, and the Trump-Clinton one was a big one. And that's why I was trying to find the 16 on the chart here. I need to go more this way. Is this 16? Yeah, okay. This is kind of more of an, I would call 2016 more of a normal election year. Normal because there wasn't COVID. We had to deal with COVID, and that kind of threw things off. It wasn't as normal, but it still behaved. This one right here, and even when you look at, I mean, that chart is great. That sorry, I can't post it here on the. I wonder if I can get in the Zoom. Actually, you know what? I'll do something over here and get it this way. We'll see if I can get it up this way. The 16 and the 2020 charts look about the same. In that, you know, they dropped early, rallied. Here's your summer sideways, up here, sideways, 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 and then this right here. 8 o'clock at night, it looked like Hillary was going to win, and the market was tanking. Hillary's going to win. This is so scary. Oh no. Is Trump going to win? And then you saw this massive turnaround on these lows, again from D to R, and it goes whoosh into the end of the year, right? And again, here's those doldrums we talked about, whoosh into the end of the year, and then some heading into the next year. The and then some was pretty significant as well. As you see, this is what happened after the election from D to R, and the result right there. So if you want to study election results, that 2016 one was right on the money early on. We thought there would be some of that sideways thought. We knew it. It was actually pretty boring to intraday trade that. And this was the night where I was remodeling the trading room. So I was in here late that night. We had all the stuff, new monitors, new everything going up, and saw it firsthand right there turn around, and it was like, whoa, this is incredible. And it was one of the bigger bars we'd seen. So yeah, that's how it went from D to R. You look at the 2020, a little different. You had the big hard drop first, and then it was a recovery effort back up into the election cycle, and then you have the election here, and you check mark into the end of the year. A little different. So it's going to be interesting here how it starts off. Again, middle of the year will be a little bit more quiet, and then you may see, just continued compression heading into November's election, and that could trigger some volatility heading into the end of the year. Those are general thoughts, but again, oh, here we go. Got it up. Right there. So this is the file there. And Trump-Clinton for 2016, Biden-Trump for 2020. Some sideways in the middle, and then bounce at the end, a little this, then check mark at the end. There tends to be a little check mark type of thing that can tend to happen. This one was 06, and remember, that was pretty bad. Well, it started at 07, 08, where it started to really drop down and get crushed. I don't know how going far back, how it goes here, but again, you see the classic check marks at the end of these years, classic check marks that happened there in many of those years. And again, you're going from Carter to Ford in this case, and you check mark higher. Anyways, a good little study there. I'll look at these some more and see if there's additional information I can glean from it. But good question there, and thank you for posting that that bit of info there, JP. And more coming through, which is great. Incumbent party wins and loses, and that's the big one right there. And you gotta, I should rotate this somehow. But incumbent party wins and loses since 1944, and you can see the various wins and losses and how things react. And that's the point I'm trying to make, is that if you go from Democrat to Republican, so the incumbent loses, and you change parties, that can tend to be a big deal here, et cetera, et cetera. So anyway, some thoughts right there, and thank you for that. I'll have to cull over some more of that info that you posted. Again, here's another great bit. Monthly percentage changes, S&P 500 during election years. And I know this is sideways. I'll change this a little while here, but let's see. Incumbent win, incumbent loses. You have these months right here, and compression. You start to see some bigger numbers over here with the check mark move. Okay, good stuff there. Thank you for posting that. That gives and provides some really good deep dive information for election year stuff there. Thanks for that. Now going back to RTY. RTY had a fantastic check mark. I know I said that the YM was probably the most bullish, but RTY was right there with it, if not better. I did mark RTY as likely the best candidate to rally the most in Q4. That was a lucky call. It's not like I'm always that good. But the idea was that we were at these lows, 1640. 1640 is a key range low. We've seen it bounce off that multiple times. Top end of the range up here near 2020, 2040. Middle of the range about 1850. That's your range. And this has been a very reliable range. This key range has been very reliable as well. And this has been the best trading range I've seen in a very long time in a market. And down here, there was like a 6 or 8 day narrow trading range just before the November FOMC key level. The November Fed comes out here, and it launches. But the day before, I mentioned I think that this has the best chances to rally the best in Q4 because it's at the bottom of its range and has only upside to go to get toward the top. Now, initially, I wasn't looking at a full-on continuation into the end of the year to the top. We marked 1920 as the high probability target by the end of the year. 1920 is the key range top right here, by the way. So if you reject at the low, you go back toward the top. It did that, and then some, and then some, and then, wow. So one of the bigger moves that you'll see from this low 1640 up to that high of 2100, that's a massive, massive move. 500 plus points, or close to 500 points rather. Huge move. Do we get a midpoint test? Strong high, strong low. That's your midpoint of the quarter. That's also the midpoint of the year. Last year's Q4 low and high are the lows and highs of the year, as is the quarter close. So the quarterly pivots are the same as the yearly pivots for RTY. That's insane. So do we get a little bit of a fall back into the range? And we already have. Again, 2040 top end of the range, 2050 top end of the range, failing hard. And now maybe rotating back down. You got the 200-day moving average, 1890, 200-week moving average. You have a lot of things down here, including the mid of the quarter and year. This one could be working its way down. Now, after such a massive check mark and rally, again, there's the potential to compress first, compress, and then see the fall back in. This rallies, and it didn't fall back right away. It took 4 or 5 weeks to build energy, and then it dropped. You sit up here for several weeks, and then it drops. So we'll see how it plays out moving forward. But this range is tremendous. We could have a test coming up near the 1850 zone up ahead. That's the center of the range. again, it's such a wide Q4 that I have trouble thinking it's going to do that. It's just not how I'm wired. Typically as a trader, you look for tendencies the market does, and a tendency is when you rally so much, you've emptied the tank out. It's not going to keep on. You tend to snap back. You rally, you snap back. You rally, you snap back. This is the biggest of them all. Why would it keep going? So that's why, again, perhaps I'm wrong about future strength. Maybe it pushes through that LVN and opens up the upside. At some point, this pivot right here at that LVN will open the door to 2450 and get us back into this range. Until then, the door's closed, but it provides a very good pivot down the road, backfilling a little bit here for RTY. So, a little different how the markets have shaken out in just one since last quarter. Last quarter, we had just seen quite a bit of weakness, and we were looking to buy gung-ho, and now it's like, I'm not looking to buy gung-ho at the moment, but there are things out there that could be in play. Let's take a look at gold. Again, gold, higher time frame. Look at gold. We're still in the weekly time frames. This is a chart that has been in play for the last 4, now developing 5 years. 1 year, 2 years, 3 years, 4 years, and now we're beginning the 5th. And the range is basically, initially the low, what is that, 1680 or so. The high end is about 2080. And then you got the 1880 right there. Those are our key ranges, key levels rather. And you can see how prices played off of these pivots over time. Beautiful. Recently, we had that massive move up to 2152.30, and in the same day dropped super hard. That day's range, week. That week's range, massive, and it is in line with the size of the ranges that we'd seen prior when you've seen rejections at these extremes. That's about as big as it gets. And then it drops back below the 2080 level. Now you have a lower high, and it's still working its way down. This price action right now looks very familiar, where you have a stab through resistance, hard rejection, lower high at the level. Right here, you stab high through resistance, pull back, lower high. Stab up, drop, lower highs, and then all of a sudden you're working your way down. This could be bearish, but I don't know if it's intensely bearish. This looks a little different than normal. Up here, we were gung-ho again about selling it. Up here, every single time we've hit this mark, we thought there was a big-time reaction coming. This time looks different in that after the massive reaction, it formed a strong pivot low and then got a midpoint test. So now you have yourself a key range. That key range throws a little wrench into things and could open the door to more strength down the road. If we're finally going to break out of this 4-year range to the upside, this key range helps to provide the fuel for that to happen. And you can see, the upside target would be 2300 in this case. And at some point down the road, this key range is going to be very, very important. And right now, it's not. Right now, we're stuck in the middle of that key range because the wide range is so wide. And that's what we were expecting as well. We're expecting gold to kind of stay in that middle 50%. If this is the middle of the large range, that's 25% above it. This level right here is 25% below it, and that's the middle 50% of the range. After a wide key range, this is neutral, and you're building energy for the next move that will be equal to the back end of this range. So developing here, falling away from 2080. If I had to say if it was going up or down, it's down toward 1880 over the course of the quarter or the first half of the year. It's down toward 1880. 1880 is the midpoint of the range. We've seen the markets react at 2080, 2080, 2080, and very easily return to 1880. 1880. This one stopped just short, boop, boop, and then got there. Do we do it again? Remember, beautiful D-shaped profile, 4-year trading range, and when you're in this upper portion of the profile, auction market theory would say sell it and return it to value. Return it to the HVN down below. And maybe bring it across the value range and then do it again this way. So bearish at the moment, potential downside, price action ahead. Stuck in the middle portion of the range for now. If you look at the daily time frame, you get a better representation of the current price action, and it's moving lower. Rejection here, selling pressure, lower highs, lower highs, lower highs, lower highs, and just not finding its footing. It's not showing any signs of strong lows. Instead, it's mostly strong highs. So meandering lower, and we may have a test at 18, I call it 1990 pretty soon. The key range low, that could be the next test down. So, you know, from 20, it's funny, I've been talking about 2029 for the entire year. Actually, since we were back here last year, we're right at that level now. If you start to push through that level, it opens up the lower portion of this range. So that could be the next short-term move down for gold. If we see any pullback, failed new high, and push this thing down toward 1990, could be the way this thing works its way out here up ahead. So watching here for gold, not super bullish, but I can see a case where down the road maybe we start to open it up to the upside through 2100. Right now, not really seeing it, and instead thinking that there could be a rotation back within the range. 1880 would be way down here. And that's the center of the range, but if you're looking at just quarterly pivots, for example, are these quarterly? Oh my gosh. The quarterly pivots are almost the yearly pivots for gold as well. That's the low of the... Yep, that's the low of the quarter. And these are the lows here of the year, and then that's the high of the quarter. So, man, what a huge quarterly range yet again. And that midpoint is right there. The midpoint of the range is here, and that midpoint is also the key range low. That looks like a magnet to me. I would say the next 40 points are down, and if you can get a pullback, you might be able to get 50 points down or something like this. So looking for some short-term weakness here toward that 1990 spot here in GC. Let's talk crude oil. Crude is nice. Crude has been very nice to us. It's been tremendous with its market structure levels. You can see them marked here, and I'll point them out. 94, 84, you got 74, and you got 64. Those 4 lines rule the chart for crude oil, and we've known it forever, and we've worked off these levels, and it's provided some tremendous opportunities and some advanced notice. You can see again a lot of market structure in here, trading between that 10-point increment. You fail, you drop to the lower 10-point, you go back, then you rally, and you're back in here. Then you fail again, and you drop back to 64s. You come back, then you push through 74s. So right here on that day, I was saying, okay, we're dropping to 64, y'all. This is about to happen. And then we got this rare, like, triple bottom here with a massive thrust reversal signal. And that's where I said, okay, this looks different now. And we might actually make a move back to 74. If we get through 74, we're looking for 84. If we get through 84, we're looking for 94. And then we got this thrust reversal signal right there and said, oop, that's the high. So we said, okay, then we're going back to 84. If we fail at 84, you go back to 74. If you fail here, You go back to 64. That's the story. Those are the levels. And right now, we're battling one of those levels at the moment. It's going to provide tremendous opportunity here fairly soon. I think soon. I think very soon. 10 to 12 points of movement or of expansion and continuation could be seen ahead out of crude oil. Your 74 key range level, or rather market structure level here, 74 is right there. These are the highs of the year so far, and look at how that level is just getting tagged by bears over and over and over. You started the year within a super narrow 4-point range. 1, 2, 3, 4, 5, 6, 7 days to begin the year, and it's a 4-point range for the most part. This thing can have a 4-point range in one day when it wants to. This day right here was 3.82 points. This day was about the same. So, that is a lot of compression in here. The other thing here, strong high, strong low, impulsive move, snap back to the midpoint. This is now a key range. This key range sets the edges, gives us our areas to do business, and then forecasts targets in all directions. All directions is important. You want to have directional conviction, but you want to have targets in all directions as well, just in case. Clearly downtrending price action, clearly downtrending channel. You got this kind of lower line, which is a shallow line in a channel, can be very bearish. It can be very bearish. This thing could open up and unleash quite a bit of weakness below. We do have that staunch 64 support level. So if we do drop, I want to see how price responds at 64. This could be a move to 64, and then if we start to reject there, we're snapping back. You fail at 64, now we have some problems, because 56 is value over the last 5 years. You're going to see S3 down there. You're going to see the 100% target of this key range. 56 would be that target. That's about 14, 15 points from where we currently are. 15 points. And to be honest, we have 15 points of range as well. I'm saying 10 to 12 to be a little modest. But all of this right here, all of that can be 15 points. There can be 15 points there. So this is huge. Okay, which way do we go? In the trading room, I've been mentioning that I am bullish crude oil for the first 2 months of the year. Seasonality is very bullish. I'll bring that up just to show it real quickly here for you all. You can go up there to the style, switch it to seasonality, go to show price as percentage, and it's a percentage move. Now this right here, invasion of Ukraine, crude oil prices spiked. There's a couple of those types of things that happen. So in the 5-year seasonality, this will be an outlier that kind of throws off the averages a little bit. You can bring this out to a 10-year and it'll soften that a little bit. Oh, that's a 10-year monthly. We need a 10-year daily. And it'll soften it a little bit. But even without this, your general path to begin a year, this is over the last 10 years. So it's taking the averages of the last 10 years and then putting it on this chart. So over the last 10 years, the average move tends to be up into the first week of March. Again, maybe not to this type of volatility, because we don't always see an invasion of a country like that, but something for a couple of months up. Seasonality tends to come in. You tend to see it back off, and then you tend to see an additional push into the highs, which can tend to be into summer driving season. This past fall, we talked about the potential for price dropping into the end of the year based on seasonality, and this year's drop was right in line with that. Actually, more significant. It went from 95 to 70 or whatever, 69. That's a massive, massive move. So you tend to see seasonality go up to begin the year. just because seasonality says we go up to begin the year does not make it a law. So it can go down first. But that's why I say if it does go down first, and we test the previous low of the quarter, that could provide an opportunity to trap on a rejection below and then return it up and then get it going back up the range. To get this and get it back to the midpoint of last quarter would be about 80. That's a good little target. If you get through 80 again, 84 would be the next market structure level up. I really want to see how. I'm very curious to see how we come out of this range. Now, here's one last thing for crude oil. I want to, and I showed this in the trading room a little bit earlier, and there's multiple times it's done this. We can focus on the last time, but here's 70 right there. And you'll notice, this little range. And you'll notice kind of this little range. And right now you'll notice this little range. And last time we were down at these levels at 70 and we built out a 6-7 week range, that happened. 1, 2, 3, 4, 5, 6 weeks up. And it went from 70 straight to 84. Actually hit 85, but 84, which is our level. So 70 to 85, 15 points. We're there again. Same range, same spot, and seasonality is on our side for the next 6 to 8 weeks. So if we can just find that bullish trigger, this could be a swing entry for a push toward 84, 85 over the next 6, 7 weeks, something like that. Now over here, we just had one big old bullish week that came out and started breaking up. Then it was a buy the dip, continuation, buy the dip, buy the dip. Do we get one big week like that? Maybe, and then it's buy the dip, buy the dip, buy the dip. Or do we need some kind of bad shakeout first? What I loved about this one back here, it was paired with this failed new low shakeout outside day up. That's a strong pattern. Failed new low, outside day up, high range day. That says, oh, we're done going down and we're about to slingshot 4, 5, 6 weeks up. So we're waiting on that catalyst right now. But crude oil, I'm saying 10 to 12 points easy. We may have 15 points that comes out of this range at some point here. We've seen it before. And right over here at that 70, like we talked about, a good 6 weeks here, right here, a good 6 weeks there, right here, this. But we're not even talking about the continuation that we tend to see as well. Does those 6 weeks back to 84s ultimately lead to 94 as well? Are we about to see a 20-plus point move overall? So good spot in the chart, great key range. A great key range. So just the key range here to here gives you an upside 100% target right there. It's 91.5, and the previous quarter's high is 92. So this range is already building the energy to get you back to the previous quarter's high. It's lined up equidistant. So what's the best entry on the chart? The best blind entry on the chart is probably 64 actually. Let this thing drop to 64 and this thing could be blazing back toward 92s up this key range like this. At the very least, if we drop down here, it could be a trip back to the top of the key range. That's an 80 spot like we mentioned earlier. If you go full on, 91.5. So great key range, great neutral development, a lot of energy, and a big time potential up ahead. Seasonality is bullish, and we're at the lower end of 30 points of market structure. At the lower end of 30 points of market structure. So you're either going to break and drop, or you're going to turn it back around and go back up the other way you came from. And so those are some thoughts on crude oil. I know, again, this market right here has been very active lately, and it could pick up steam yet again. So tremendous action here. We'll see what happens. ahead. Again, is inflation data going to be a catalyst? We'll see. What would be so for tomorrow? If you want a one-day trade opportunity for crude oil, that low tomorrow. If price drops below that low tomorrow, right in here, 70.5 or so is a trap. Attack the midpoint and push towards 74. That it's up a day, down a day. That could be in play. If you push through that high though and get a stop run, you're triggering that multi-week move. So this one has a lot of good potential here. I really, really like this one. You can trade crude oil itself. You can trade the options on crude. You can trade USO for these shorter term moves as well. That's a great question there, Mina. How to figure out when is the seasonality? So I would say there's seasonality everywhere for lots of different types of products and charts and stocks. I don't know if there's always a seasonality to something, but there's always seasonality to some things. So that, having said that, for example, summer driving season, if the market tends to, summer driving season, gas prices go up, crude oil goes up. It's a supply demand thing. So there's seasonality behind that. And then during the winter, you may not drive as much, and it's less demand, so it comes back down. So crude oil has very clear supply demand seasonality behind it. And what I would tend to do is go again over here to the style, go to the chart mode standard, go to seasonality. I always go to the show prices percentage, because then it goes current percent and actual percent there. And then I'm careful to look at multiple segments of time. That's a 5-year, there's a 10-year, there's a 20-year. You can customize as well, because there's some times where outlier action will kind of throw off the seasonality. Now, when I look at seasonality here, I'm not really concerned with every move everywhere. I'm concerned with the ones that show up and they're most important. For example, the seasonality in here, not very good, whatever that is. And that's because here in April, you're rallying toward a summer driving season to push prices up, gas prices are higher, supply demand, and now during the summer, prices are high, and then they start to come down in October. So this right here, to trade the seasonality, that's tradable, that's tradable, that's tradable. And then here at the end of the year, I also mentioned there could be a rally portion that's tradable that carries you into the beginning of this year. Those are my 3 tradable spots of seasonality for crude oil. Every chart's a little different. You look at nat gas, you're going to get different ones. And so if you look at nat gas, for example, you tend to see different types of action, but similar. As you're coming into the end of the year at times, or colder times, more folks use natural gas, prices are high, and then as you come back down, things will normalize, you drop. This seasonality can tend to be quite good. One of the better ones would be here, mid-March into the beginning of June. That's a seasonal pattern that happens quite well with nat gas. And then you can see the next seasonal pattern up, and then the last is to sell at the very end. So again, these products that have clear supply demand can have very clear seasonal patterns. Caveat is these are averages, and they're not perfect. If you look at last year's seasonality for crude oil, it was completely opposite the entire year. We noted that early on and said, okay, well, this is an opposite year, until the end of the year when, prices dropped, in which case it came back with seasonality. So you just have to know that. There's other things that have seasonality. Apple tended to have some seasonality here, seasonal patterns. I mean, look at this seasonal pattern, by the way. Drop to here and then rally to there, and it's almost exactly against the 5-year average. But one of the seasonal patterns that I tend to notice in Apple is this rally right there. And especially the August rally. That one right there. August rally is here to here. And you'll notice that that kind of lines up with kind of Apple's, what do they call it? Apple Day? I forgot what they call it. You know, the Apple conference, and they're releasing their new this and that's or whatever. And earnings and all that. And it all comes in and there's optimism. So you get this really good pop in August for Apple. But you also get, again, the buy into it can be quite bullish at times. That's a seasonal tendency on a stock that you can tend to see. And again, seasonal tendencies are great. They're not always perfect, but they do give a good blueprint for what could happen up ahead. This one was a little different last year because earnings was bad this time for this one. It had rallied so much into it, and then it was not a bullish August. So that was an outlier August against normal. This would be kind of normal here, where you have kind of, you know, this right here. That's the beginning of August, and there's your earnings, and then here's your high. That's your August move, and then look over here in March. It rallies up into it. Not March, June. June here rallies into that August high. Anyways, that's a little bit of seasonality there. I want to go over to Bitcoin now and Ethereum. I know some of you in the trading room here that hear me often know a lot of what I say here, and we've been working on these charts for quite some time. And so you kind of know the history. If you haven't been in the room in a while, or you're new here and jumping on our monthly outlook for the first time, or the first time in a while, welcome. I think we nailed Bitcoin about as good as it gets last year. Not saying it was hard to do, but it was, it was ripe for the taking. And one of the things I was pounding the drum about late in 22, was, we just formed this little tiny box below 18K, which is a very important level here. If this market can bust above 18K early, we have a shot to make it back to the midpoint of the previous year's slaughter, which was 31.7. That was my year forecast. And it did it in the first 6 months of the year. My forecast for the year was break above 18, rally back to 31.7 by the end of the year. It got there in half the time. Tremendous movement. Once the initial phase of strength was seen and you pushed through the 25K level, 25K became very clear market structure support, very clear LVN, and so 25K was our retest buy entry late last year on multiple times, especially after the breakout. So from 25, this thing rallied up to 45. So a plus 20K late in the year on that. Man, you can't draw it up any better than that. Now, you have this rounded bottom, or maybe a cup and handle. Classic pattern. And you go across the highs of that pattern, and that's about 32.5, and look at the transition through that level. Massive transition, a massive move to the upside. Again, this one rallying on the potential for an ETF to be approved. Was it approved already today, finally? I think Mina may have posted something to that effect. Anyways, very, very strong movement. Now, in terms of the market structure here for you all to follow along with, it's every 10,000 right now is very clear. So when price was able to get back above 30, and here's 20. When price is able to get back above 30, that's what we kept saying. Once it's able to get above 30, we're rallying to about 45, 50 easy, right? You got that big move across the range. Now we're in this market structure right here, right? So you see a recovery of the bottom end of that market structure, so you make a move across that market structure range, and that's what we've done. So we did the pie in the sky estimate. My, kind of very basic estimate was, hey, we get back to here and we should be happy. But if we can get through 30,000, 32.5 or whatever, we get back into this range, we should be making our move back toward 47.5. That was the talk. Here today, right now, we're at 47.4. We got there. What a move. Now what? Normally, you get to the top of a market structure like this, the potential is to go back down and build that range a little bit, and then maybe make the move to the next market structure, build out, and go. That could be a tendency. Sometimes you can bisect the market structure, go smaller, smaller, and go. Kind of like this one, boom, smaller, 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 go. But we also know that the nature of this market can be very, very excitable. So just like we've seen lately, this move is very, very bullish. But in order to really make it to the next level above, we got to get through 50K. And you got 40K here, so it's every 10 right now. It's comfortably above 40, which means we can drop into 40 and likely be a buy back to 50, if not 60. That's likely a little bit of a path forward here that could be in play for Bitcoin. When you look at the totality of the larger range here, we're working our way up that range. So you have this up to here. That's your large range. And then we just spent a year and a half trading completely below that range in a saucer. And now that we've recovered, the goal is that. So ultimately, 70K. Ultimately. When does that happen? How? Do we continue to see this big launch? I don't know if Bitcoin gets this massive pullback and then, you get your move this way. It may build out and then continue if it doesn't outright explode. Kind of like when this thing rallied and you got that big rally, it didn't keep going. It said, let's build some energy here. Let's digest in this area. Let's facilitate some trade and then go. But ultimately, through 50K opens up 60 and 70. And when you look at that right now and you say 47.4 to 70, that's about 22,500 points on 47,000. So call it a 50% rally or something like this. Let's see. Let's do actual math here. Where are we at right now? 47,490. And then we still have, 23,000 points. Yeah, that's about 50%. So 50% more upside from current prices. What if we pull back, though? Can we pull back to 40 and go 40 to 70? Can we pull back to 35? Can we go 35 to 70? That's where a double could be in play in the best case scenario. If you can be patient with Bitcoin and you're like, hey, I can just hold off for now, 35 might be a very doable entry at some point down the road where you get 70. We'll see. But I just wanted to talk a little bit about the potential strength toward the upper end of the range. Right now, stuck between 40 and 50 with an upward bias. You start to get this thing, you start to get that ETF, and what I mentioned today probably, or maybe yesterday in the trading room, was that news alone has already triggered kind of a buy the rumor. Are we going to see a sell the news after the ETF? I don't think so. Because every time they've kind of had those fake tweets that come out or fake news items and says, hey, it's been released, it's been approved, the thing rallies and then kind of softens up. Then it rallies and softens up. So it's wanting to go. So maybe it shoots up first and then works its way back afterwards. I don't know if it's a sell the news after buy the rumor. If it is a sell the news, again, 35. Keep an eye on 35K for long-term entries. 35K on this trend line kind of thing could get you, with patience, to a double down the road. So some thoughts on Bitcoin. Now, let's move over to Ethereum, which I think has more upside than Bitcoin, even though it has severely lagged Bitcoin. Bitcoin has clearly dominated in the prior year. Even with the opening rally to the year here, ETH had a great move. Just like we were expecting a move to 2200 to begin the year. We were hopeful that we could get a slam down and then rally, because that would have been an easy double. Instead, it just kind of rallied and doubled anyways. This is a lot of compression right here. A lot of compression, all below the 2200 level. And above the 2200 level gets you as high as 36, and that's your market structure right there. The midline will be 29. So in the trading room here, we've mentioned that to find acceptance through 2200 could be a market structure recovery of that level that opens up 29 and 36 ahead. And right now, 26.17, it was up like 11-12% in the RTH session, and right now it's coming out of the gate hot on the after hours reopen, gapping up, just like Dwayne mentioned here. Bitcoin gapped up from the open, or at the after hours reopen, so did ETH, and we're running. So by the end of the year, if this thing has some catch-up, look, this is all clear air above. Whereas Bitcoin, by comparison, is somewhere here and only has a little bit more to go. This thing has all of that if it wants to get all the way back to 5K. I don't know about 5K right now, but 3,600 looks very doable this year. 3,600 looks very doable. You know, to get something like this could be in play. Again, how does it play out? 2,200 to 29 is the first increment. 29 to 36 is the next. And then if you can get through 36, you start to open up 36 to 5 in that area, right? So this one has some upside, a lot of energy built up. It's broken through the 2,200 rim of this saucer pattern and is exploding to the upside. This is a full-on transition through 2,200. We're working to 29 now, with a continuation toward 36 that could be ahead by the end of the year. Now, I know we just rallied a ton. We were at 2,500 or so to close the day, and now we're rolling through 2,600. Where's my calculator here? Let's see. Where are we at? We have, if 2,600 takes us to 3,600, that's 1,000 points there. And we're looking at right now 2,600. That's a 38% return. So from current levels, 38% return to 3,600. And we were looking at about 50 for Bitcoin there on that move. So a ton of upside potential here for this one. I feel like all of this energy here for a year and a half says we might be ready to go rocking and rolling for the next year and a half. Right? When you look at the time duration of a compression, that time duration can tend to give you an estimate on when a move could end. Are we somewhere in this zone a year and a half out? And if we are, that's about a double from where we are now, 2,600 to 5, or maybe a little pullback. So this looks very, very bullish coming out of that range. Um, and we're working now back into this larger portion of the range with this strong pivot high that could be in view at some point down the road. So these are looking quite bullish. There's a ton of other coins that are smoking hot right now as well. And one thing I've mentioned before, three things that was going to take the lid off of Bitcoin, ETH, and crypto was any regulatory issues going away, a spot ETF for Bitcoin, and interest rates going down. As soon as interest rates started to spike, that's about the time we got all-time highs. And as soon as interest rates start to come down, and you start getting closer to that cheaper money, I think this thing really, really comes off. So those three things right here opens up some of the upside today, this week rather, very, very strong right now. Could be very, very nice moving forward. Very nice. Okay, so that's ETH. Let's get to some stocks. Carvana's a stock that we liked last year. We liked it much cheaper last year than where it currently is. But this was one that we initially saw as a great rounded bottom down here, around $8.50 or so. That's where value was created after it dropped. And we noted right there that, you know what, that 8.5 looks pretty cheap. Looks pretty cheap. And now this thing put in a high of 61 this year. So from 8 to 60. Tremendous move. Wow. And just recently, 25 to 60. So that was a double plus in Q4 alone. Great, great action. Great movement. And this is, again, over the last couple of years, what the actions look like. I'm looking forward to what could happen once we get through 60. Because now we're looking at a massive multi-year accumulation pattern. We've moved away from the super cheap VPOC. And if we get through $60 here, there's open air up above to travel into some of the market structure above that hadn't been traded in a while. And it could get there rather quickly. So right now, you got $45, $46 here. If we're able to push through 60 at some point this year, what does that become? Can we get it to 160? If we get true expansion out of this range, you're going to see some major lift. You're not just going to see it hit 100 and then kind of fall down. This is energy designed to lift this stock. I am being very guarded on upside targets and saying 160 is a great target. Long term. We're talking long term now, right? These are long-term opportunities. But man, for the year, for this year, can we get 100? Can we get 100 this year? If we pull back, and we have pulled back a little bit on the right side of this edge, can we check mark this thing into 100 this year? And again, if we can, it's a double. I keep saying double. And let me explain a little bit here on how you would engage something like that. If you hadn't heard my free trade idea before, a free trade is not easy, but you see it happen over and over and over, and again in multiple stocks. It's a way to build in a free trade into a stock where you get a double, take out your initial investment, and now you have a free trade, free shares for the rest of time that can't go to zero. It just goes to break even. So what that is, it means is 45, for example. You buy 100 shares at 45, and say it gets to 90. You're patient, and it gets to 90. That's a 100% return. You sell half of your lot. In this case, 50 shares. Sell 50. 50 at 90 is the same thing at 100 at 45, right? You're taking out your initial investment, and now you're holding on to 50 shares free and clear. Free and clear, and you can hold on to that. And it can go to 100. You can go to 160. You can go back to 400 if you want to. You can hold this free and clear. And that can be done quite a bit. If you're very aggressive about it in terms of identifying these candidates, it can be done. I mean, look at this right here, 25 to 50. Had you bought 25 and sold half at 50, you're already in a free trade. Have you gotten in at 8 or 10 or 20? It's already doubled or tripled or more. So that's one way to get in, where you can be in on a trade, allow it to do its work. If you're fortunate enough to get that double, you can take half, and now you can be free and clear, invest that in something else. Sometimes those doubles become triples or more, quadruples, and it's a beautiful thing. And then sometimes, obviously, you don't always get that double. But this is one of those cases where it built so much energy. You have so much price chart above. Look at your 200-week moving average way up here at 130. I mean, man, is this thing about to open up the upside. So I'd really like to see when this thing opens up through 60, because it could really open up 100 or more, 100 to 160. There's also playing the actual range here. So what if it drops to 30 or 25 again, and then being back in the range? There can be that. So I wanted to discuss Carvana because it's been on our list for a while as a long-term candidate. It's done quite well from the $8 zone, and now it's building for an even bigger move that could be tremendous down the road. Keep it on the focus list here, and we'll see if we can make something out of that one. I wanted to talk a little Roku. Roku right here, this one has been a very bullish stock this past year. It also doubled. We had that idea as well. Mentioned, man, down here at 40, you reject that early low, you might be able to get it back up and double it. It almost got there in the first portion of last year and eventually got it over here. It did quite well. It also gave us a great key range here that was in play. It gave us this key range here that was in play. And on this key range low, we mentioned between 50 and 55 could be an opportunity to be in and double. And it did. It eventually did. Almost to 110. But by the end of the year, so you had to endure some wild action here. But big time movement. Generally speaking, that right there is exciting. I know that's a daily chart, so we can go to the weekly, and it kind of looks like Carvana. Look at this. Kind of looks like it. Again, pie in the sky, crazy prices. During that year, it was not about buying anything. It was mostly selling that crazy price. Things dropped down. Do we ever get back there? I don't know. I kind of don't care. For the current price action and this rounded action here, you can start making some hay through 100. You're opening up 180. 180 could be ahead. That's the top end of this market structure there, with a little midpoint there at 140. Again, with all of this energy, with value down here at 65, if we can push through it and get that moment of transition, it opens up quite a bit of upside. I'm saying 180 as a modest target. Like, can we get 180 once this thing can break out? That's a modest target, though, because I feel like this amount of energy gets you much more than that. Can we get back to 280 or 300 at the bottom of this range? Again, I think that's where the true target could be for Roku down the road if we get quite bullish. I don't want to get too pie in the sky, though. So that's what could happen. If you focus, again, on the closer targets, you can kind of reverse engineer a little bit. If we think 140 is in play, then 70 looks nice. If we think 180 is in play long term, then you could buy it today. You know what I mean? 90 to 180, sell half. Not recommending buying it here at 90. Let's let this thing play out and work itself out a little bit. Again, if we get a deep pullback or set a good key range, that'll give us better opportunity down the road. But from a pure price perspective, an accumulation perspective, market structure perspective, this has some of the properties that some of these other stocks that we looked at have, like Carvana, for example, where the energy's there. They've been punished and held down enough over time, and now maybe it comes back. But that's once we get through 100. Until then, we may be working on the bottom, you know, on this right edge over here of the next rounded portion here. So how much pullback do we get? And that's where I'm saying, you know, maybe 60 might be very, very enticing if 140 is ahead, right? So an accumulation candidate to keep an eye on. Accumulation candidates can be tricky because they can accumulate a little while longer before you finally get that breakout. So that's a great question there. On the big rounded bottom charts, do you try to identify the neckline price and make plays off that level? Yeah, the neckline price is very, very important. Very important. And that's the level where, again, you know, you really want to see that transition through that level to really open it up. On a big rounded bottom, there can be multiple ways to play it. It always depends, but and the three ways I like to, at least, would be being in at value. So once a large accumulation develops and it's just sitting there at value, okay, let's accumulate as well. Now that comes with a time factor as well that is, you know, unknown. How long will it continue to accumulate, and you know, et cetera, et cetera. But sometimes when you've dropped enough, when you found a base enough, and you know that's accumulation there, we've seen it time and time again. You could be in at the accumulation and wait, but then you're waiting. Another time would be, again, where you have your neckline or your major resistance portion of the rounded bottom, and you're working off the right edge over here. You know, ideally they should be a little bit higher. So if we slam down and put in a strong key range low, work off the key range low to attack the line, and ideally break through it at some point. And then, so this is number one, this is number two, and number three is, you know, if you see the expansion already happening, there could be some sort of pullback and engage, especially if that transition looks legit. The transition day would be a high range day, G squat likely, right? More volume, more market facilitation index, and high ADR day through that zone, or perhaps even a week. That really tells you things are about to open up. Usually try to be in before that, but that's not always the case. That's not always the case. As a matter of fact, let's see. Let's look at SWAV. I know I showed this one in the trading room a little bit earlier, but this has some of that, some of those qualities we talk about here when you're transitioning out of a range. Massive G squat right here. High range bar, higher volume, higher volatility, or MFI than prior. Outside bar, slammed hard to begin the day and bounced, auctioned off that level in tremendous fashion and rallied huge. So this is kind of where you have this little pattern here, and now you've broken and then you've held. So now it's kind of, okay, we're reacting. Instead of trying to be in ahead or trying to be in ahead, we're reacting to the transition. This right here could be day one transition that really opens some things up to the upside. We talked about that a little bit earlier. If you look at the weekly time frame, right here, you know, this break happens at about 200. And you have this kind of little range here built up, and then you get that day that breaks and finally goes. It's kind of like when you had this little range and then you start to break and go, or you're down here at this level and you start to move. This is almost like today's bar. I know this is a weekly, but you drop, 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 find a low, rally, outside bar up, and then a couple of hold weeks, and then explodes to the upside. You know, are we going to see a continuation now to the upside given today's price action through that 200? It could be very, very bullish here moving forward. And so again, this would be one of those ones where you try to identify that re-entry and see if you can piggyback in on that strength. If this thing can get through 240, that's where things get really exciting. Through 240. 240 would be that level right there. That's the highs. That's the transition. That's the transition. Here you go. Here you go. And right now, we're working our way toward 240 and the previous year's midpoint. So working higher toward that level, you break this level, and you open up the upper portion of that range. So that's SWAV with a transition style day here today. Another one here I wanted to talk about was MARA. Marathon Digital, crypto-based company here, showing quite a bit of strength in Q4. Value rallied from $9 to $31 just in Q4. So again, a massive move. When you have a massive move of that magnitude, I usually say, like, right, you rally that much in a period of time, then you're probably going to see a pullback with some compression that develops, or compression that widens out into a wider. So right in line with what you expect, massive Q4, and now you have yourself an impulse move. Strong high to a strong low. Bounce backs to the midpoint. That's a key range. That's a key range. And my favorite ways to play a key range. In a bullish market, key range high, key range low. In a bullish market, you trap below the key range low. Key range low here, price drops, you trap here. And you return it to the mid, return it to the high, and maybe all the way across the range to the 100% extension. The 100% extension is 42. So this key range right here is suggesting that 42 could be a target down the road. It's also suggesting that 9.6 could be a target down the road, because that is equidistant to value. Man, oh man, isn't that crazy how those things line up? So that's your range. Are we headed down to here? Or are we headed down to here? Or up to there? 42. Is 42 in play? I've mentioned before that some of these crypto-related stocks, Mara, MSTR, Coinbase, Riot, Hive, whatever. Name your stock, right? There's several. There's many more. They're gonna lift with the rising tide of Bitcoin, right? So if Bitcoin's rallying, these things are gonna run. And Bitcoin had quite the quarter last quarter, and so did this one. So if we are expecting Bitcoin to continue to show strength, Ethereum and some of these others, then the flow likely remains up for some of these stocks. But you have to be careful. You have to be careful with some of these stocks, right? Because they are quite volatile. They giveth and they taketh. So be patient with it. If we think 42 is a target down the road, and the key range low is 20, a 20 to 40 is a free trade. But remember, I think that a trap is best about right here at 18. The 25% level below the key range low. If we can hit 18 to 36. 18 to 36, sell half, free trade. And watch this thing do its thing after that with no emotional attachment for the most part. So key range. And that's kind of a theme here of the latter portion of the market outlook here today, is that these key ranges, the impulse move that provides a key range like this, are money. These are gold. They're just tremendous in value, because look at all the ways I can analyze this chart and make moves off of it. It gives me these forecasted targets. It gives me the areas to trap and areas to snap back to, etc. And it sets the boundaries and the edges for what's to come, and that helps provide a blueprint for moving forward. So the blueprint is be patient. And again, with Bitcoin, Ethereum, everything rallying right now behind the spot ETF and all that, are we actually going to drop? Who knows? We might just keep on going and hit 42 right away. But any pullback, hard rejection on the low could be a great in for what could be a double up ahead out of this stock. And I would say when you get something like that, take it and move on, and go ahead with the free trade. There's other times where you may want to hang around, but yeah, sell half and move on. So that's one to keep an eye on moving forward. Another one, IONQ. One of our traders in the trading room brought this to our attention here recently, and I like this one. It had quite a bit of action last year. It went from $3 to $21, so that's a wide, super wide range. Not sure we go outside that range anytime this year, to be honest, but we might. We'll see. That's the high of the year. That's the low of the year. That's the midpoint of the year, and that's also where it closed. So it closed precisely at the year's midpoint. Man, oh man, when you close at the center of a range, you tend to see a move to an extreme fairly quickly. You tend to see either a move down here, then you reject and come back, or you see the move up and you reject and come back. Because we're right at the middle, between extremes. Or is it just going to get stuck here then? And then you got to make your move to an extreme. Again, do we believe that we're going to see $3 in the stock? I mean, maybe. But perhaps, again, we may be rolling higher or attempting higher. We are currently at value. So with this one, it's classic in the oven still. This one's still in the oven, still more time left until it's done. But it is right at value. It's at last year's finishing close. It's at the midpoint of last year's range. It's right at yearly VWAP, and it's right at the 200-day moving average. You cannot be more average range than that. When you're average range like that and you're right at the averages or right at value, you tend to want to discount before entering. So again, be patient, and can we drop and get a little bit of a discount? If so, look at this key range low right there, right in this zone right here. Can we get a trap in the 8 to 9 zone and then return this thing up to about 16 to 18? Can we do that? D-shaped profile here, little bump there, but key range here, key range high there. We don't even need to take it all the way to the 100% target, which is marking 24 as the high for the year, or at least for this key range is marking 24, which means you could be in right now at value at 12 and have a shot to double this thing based off key range alone. And we know key ranges are very, very powerful. They don't always work out perfectly, but they are super powerful. My favorite, though, waiting for a test down here, being patient, and trying to be in for a shot this way. Can you go 8 to 16? That's a double. 8 to 16. Again, off the key range low. I wouldn't normally be saying this about some random stock, but key ranges help a lot of things. This one's also seeing quite a bit of more trading action and price activity than before, so it could continue to be in play up ahead. So that's a thought on that one. We also have Crocs on the list here. The reason Crocs is on the list, it has also a key range. Strong high, strong low, and then a couple of days ago, massive gap right to the midpoint of that pattern, and now we have ourselves a key range. Another great key range to work with here for Crocs. The 100% target of this range is way up here at 136. That's how big that range is. You got 85 low, you got 110 high. That's a great key range. Again, based off of this key range, can we be patient? It may go up here first and then do this, and then what happens if it goes here? Can we be in somewhere in here between 80 and 85 and try to swing this thing back up the range? So key range price action here provides some really good levels to work with. From a longer term perspective, Crocs had a great Q4 for the most part and then kind of faltered. A great rally and faltered at value. It's still struggling overall. It's kind of between two major extremes. So major extreme up here, major extreme way down here, and it is right here in the middle. So we've got a lot of compression in this mid part. This key range could provide a little bit of a key here to trade the middle portion of this range. But again, I would caution just to be patient when you're using key ranges and just kind of let the action come to you. Right now, not much to do in this one just yet, but could provide some movement off that key range. I want to go to Tesla. And then I see some more stocks being mentioned here, so I'll pull those up. For Tesla, I mentioned in the room here, this one has some major potential ahead, but also looks very messy. It's a very messy chart. After this big rally here, this right there is just a whole lot of mess. A whole lot. By contrast, other stocks, kind of did this last year. The trending market. Meta went straight up. Apple went up and kind of held up here at these highs or whatever they did. So, different looks and feels. But this one is just all over the map. Wop, 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 wop. We have 60-point market structure levels for this one. 100 here. 160 there. 220 there. 280 here. 340. And finally, 400. Those are your 60-point increments for Tesla. Last year, we were trading about 100, and I said, oh, this looks great. We could be looking at this thing bouncing back toward the 220 level. It did it in like the first month. It did it so fast, it was wild. Then it came back and sat on 160. So it went through this market structure level up, comes back and retest it, and right there, we said, okay, at 160, we should hit 220 and 280 because you're going to go to this market structure and maybe break through and hit the next one up. So right here was our buy of the year basically on Tesla, where we said 160 to 280 should be in play. Great move, and it even bested on this one here. So really great moves last year on a couple of good rotations. Edge. Then this was a breakout to the edge. Then up here, rejected back to 220, and ever since we've been between 280 and 220 and stuck in that range. And something's about to give. Now the move is coming, perhaps. Now, if you look at this compression, that's about as good as equilateral symmetrical triangle you get, something like this. You get a good back end to a good back end low, a lot of compression, especially toward the apex. This back end is 220 points, which means we should see about 220 points of movement once we get expansion or movement out of this range. Which way? Well, if we go 220 points down, you go to 0. So maybe not that. But you could drop, find a strong low, and then rally 220 points. That could take you 180 to 400, for example. Check mark move. If you look at last year's range, that's last year's range. 300, 100, 200 midpoint. Only Elon Musk's company would do something like that, where it's perfectly set up that way. But down to 200, 200 at the midpoint, up to 400 down the road, maybe that's in play. To think you could get a double on Tesla this year, maybe that's the way to go. Again, how far down do we go? Can we get a drop to 160 and then maybe make it back to 300? So right now we're inside this middle distribution, and you have this lower one and you have this higher one. Which one are we going to go get first? We drop down here and then make a move up. Do we rally up here and make a move back down? This one's designed to keep you guessing right now. That's why it is perfectly at the middle of this range, trading 240, 250, and has been doing so for a good 6 months. It's about to go. This thing's about to go. And anyone, I think Tesla's still one of the most highly shorted stocks, or has some of the highest short float, something like that. Man, you know, you think about this type of move or that type of move. You know, even this move after weakness, if we can get one hard drop in Tesla to begin the year, that low could be the basis for what gives us a good bouncing off point up ahead. So, again, a lot of potential energy in crude oil, in Tesla. It's the opposite of crude oil. It's electric. The play is checkmark. A checkmark style move this year, but it's harder because here's the close, here's the high, here's the mid. We're close to the mid. We got to go test it. Got to go test that mid and see what it's made of. Does 200 open up 400 this year or next? Or do we got to slam a bit harder, go 160 and try to squeeze it out? This one's going to be one to keep an eye on from a big-time breakout perspective down the road. When it happens, we'll know. We'll be on top of it. AAP. Scott's asking about AAP here. I am stunned of the price of this one. I'm stunned. I've mentioned this before. I have no clue what's happening here. Maybe I need to read the news a little bit more about this stock, but clearly nobody's fixing their cars anymore, and that's why we're at $60. At any given time, this one is a triple-digit stock. It just is. It just is. And triple digits would be, here's 100 for example. And only a little bit of time does it trade below. This was COVID that put it below, and then it snapped back and went to 240, 250. Over here, this was, what is that, 17? Drops, and when it recovers, it makes its move back up. So 190 is a good, you know, you fail here, you go back. You fail here, you go back. And then right here at 190, it dropped and took it. And then this was a bid bag ugly, likely earnings related, gap down, whatever it was, major sell-off, huge weakness, and then some. Dropped to 50, y'all. That's $50. It's always above 100 for the most part, right? I mean, always, 90% of the time. So, has this one sold off enough that, I don't want to call it a dead cat bounce, because I don't know if this is a dead cat. This has a lot of validity. You know what I mean? Maybe, again, the prices of used cars so high. Maybe people just stuck with their stuff, but then you would be fixing your stuff, right? I don't know. Now, used car prices have dropped quite a bit for the first time in many years, and maybe that means that this thing may rally. Who knows? I would say for this one, it's so cheap. It's almost a buy just because of where it is. To get it, because if you get it back to, say, the midpoint of last year, I mean, it's almost a double there. Again, you're at about 103. That's 103. and right now we're at 61. So best case scenario, I would normally say, is let it drop down here, reject here, and bring it up. And as we know, that doesn't happen all the time. Instead, it leaves behind the low and just says, whoop, I'm going to go. I'm going to make a move for that pink line right there. That pink line is the one that I'd shoot for the year. It's the midpoint of last year's range. If you want a quarterly mid, that would be not really doable. We're already there. Last quarter was very, very tiny. So it's the yearly range we're working on here. And the yearly range right now suggests a bounce back toward the midpoint. You know, you close at the extreme, then you're going to look for a reaction here to bring it back up the way. Still believe in this stock, unless they're just going bankrupt or something, you know, and I haven't read the news on that just yet to see. There was accounting errors and things of that nature, so it looks like there's just some wonkiness, which is why it got crushed. But if we had to decide on a good high probability target, 60 to 103. And if you start getting above this LVN, things are going to get magical, because that's when maybe you're working your way even higher. You know, can we get back to 120, 130 or something like this, or can we even get back to value? So value would be here. 60 to 160 almost. Can we get back to value at some point down the road? Because value was clearly offered, and you drop, pain, and then you snap back to value. And it takes some time sometimes, and sometimes it doesn't. COVID, dropped, rubber band back up. Other times, it might grind it out. So I was perplexed about this one earlier last year as we discussed it and mentioned, man, I just don't understand it. But maybe, again, something wonky on the filings there. You're right, Sammer. I mean, who has time to fix their car? I certainly don't. There's some things that need some attention as we speak. So those are some thoughts on AAP there for you, Scott. Another one here, mRNA Moderna. And thank you for staying extra time here with me. I'll wrap it up here pretty shortly. mRNA, this one. And to begin the year again right now, kind of looking at some weekly charts. You know, I want to get the bird's eye view as we begin the year. And, you know, you start to see some market structure levels like this 120 pop out. 120 is right here, prior support. You break through, you make a resistance, you drop away from it. When you find rejection, you snap back to it. This one came all the way back to value, by the way, down here at 67. After it had exploded way up here to 500. So value was here. That's value right there. It created value, and then it rallied on COVID, hit 500, and then dropped all the way back to value. That's a lesson, because it happens all the time. These types of things happen all the time. So when you get that windfall, massive, you take the profits. You ring the bell. You ring the register somewhat, because this type of move can tend to happen. It just does. We see it all the time. But right now, what's going to happen next? I think we have a shot to go 120 to 200. In the best case scenario for bulls. You're basically breaking this down to the 120 level here, which is the bottom of this range, and then you take the top of the range, which is 200 here. That's the top of the range. And right now we're kind of getting our bearings together to attack maybe prices above 120. Maybe it has to build out, and as soon as it can push through 120, it has a shot to work its way back into the range. So this is the range. Can we make it back up the range? Last year's range, previous high, previous low, previous close, previous mid. So in order to make it to that side, you got to attack that level. That's the midpoint of last year's range. So right now, working our way higher, if it can get through 120 and then 135, you really start to open up a little upside. But if we don't push through 120 soon, then we could be stuck for a little while. This is a huge move. I mean, this is 60 is right here. I mean, it was right below 60, and this is 120 we're talking about. So it's almost a double just from the lows. Almost a double. So it's moved quite a bit right now. It really has. So maybe a little bit of build out and continuation. If it doesn't get through 120, though, we could be stuck in this range for a little while here or building out. I tend, and I don't know anything about any COVID jabs or anything what's going on right now, and I haven't been paying attention to any of that, or if people even do that anymore. But just based purely on price, this range is the one to watch. You got 120 to 200, and once we're able to push through that 120, good things could happen. So that's the thought process right now with this one here at the moment. 120 opens up 200, but when does that happen? We'll see. Could be some build out first with a way to get higher. So some thoughts there. Oh, they're getting into cancer treatment as well with positive results in December. There's been a lot of good. I don't know why. It seems like I've heard a lot of good cancer updates and really, really good positive stuff where before that would have been the biggest news ever. 10 years ago, 12 years ago, 15, you say, oh, we're doing this with cancer and we're seeing cancer cells die because we did this and this and that. Remember, curing cancer was like the biggest thing ever back in the day, and now so many companies doing good things and it's on the back burner. You don't even hear about it as much. Instead, it's Jeffrey Epstein, I guess, right now, and UFOs. I can't get enough of the UFO stuff, though. That's fun stuff sometimes. Oh, by the way, you see that jellyfish UFO? Oh my gosh. All right. So, wild stuff. So, yeah, through 120, that's kind of the market structure you love when you have this great market structure to work with. As soon as you can recover the bottom end, you work your way through to the top in many cases. Another one here to take a look at is coin. Mina asked or mentioned coin a little bit earlier as after hours making a move higher to about 164 after hours. That was down here, kind of made a little bit of a move up, kind of a check mark move in after hours trading. I was going to mention coin here today, decided not to, but since we're here. Coin is one of those ones where we said, oh, look, accumulation. You could be in at 60 and wait forever. But ideally, we make a move to about 115. Once we get through 115, the lid comes off and we open up the upside. Broke through 115, rallied to, what is that, 190, 180 something. Great move. It doubled plus in Q4 alone. Massive accumulation. So you see this pattern right here has been very prominent today in what we're doing. A lot of accumulation, and this one is one that actually made the move already. So where's the pullback? Low. Is it here? Do we get back to about 115? If we can find and figure that early low for the year, the check mark takes you higher. And I would say 260 could be in play. But why? Why would I say that? Because again, we're using the PivotBoss pivots here. Your high, your low. We got the breakout here, up So if you pull back to the 50% portion of this range, 50% being that pink line, and then rally last year's range, it takes you to 50%. So from the midpoint to the R50 here is equidistant to last year's range. That would be a move that could be in play for this one. Again, this one is one regulatory deals hindering for a while, and then things started to open up. Once Bitcoin started to rally and all these, and you start seeing more engagement with crypto in general, this one's going to come alive. Altcoins are coming alive again, and it feels like everybody forgot what happened the last time. So things are looking up again for this one. Maybe given last year's fairly big wide range of price action. I mean, we went from 30-something to 180-something. So that's a massive move. So I would say there's some time in the middle here for a while, and then finish the year somewhere up in that zone. So if you're looking at 260 and you cut that in half, 130 is a double in that case. But 130 is way up here, and we're looking at about the midpoint of the year, which is 10. What is that? That's 110. This is $110 right there. You come back to 110, can we go 220? You know, something like this. So just being patient to begin the year. That's a big, big theme of what we're talking about here today for the first monthly market outlook of the year. And for Q1, a lot of these stocks rallying, a lot of stocks on the highs of the year after massive Q4s, pullback compression likely early on this year, or especially in Q1, with the potential to finish strong down the way. So some thoughts there on those. Another one here, a couple of more, and then we'll head on. Peloton. This one, now speaking of Moderna, getting above that 120, this is a similar deal where you have $7 to about $14. So that's your prior range here. It did explode through it, but then fell back into the range, down to the range. And now we have ourselves a 1 quarter accumulation pattern. So over the last quarter plus, an accumulation pattern. A strong pivot high at $7 here, that's the doorway to open up the upside. If it can get back above 7, we can get to maybe 14. Maybe 14. That's a double because it takes you back up into the range. The first trading day of the year, we mentioned if you can get 550 on an entry, 550 to the midpoint of last year's range is 11. That's a double. And on the second trading day of the year, it hit 550 and bounced to 7. It's given another opportunity now. So, even from now, 6 to 12. We think it can go as high as 14 just based on the range. But maybe that's pie in the sky for such a beat-up stock. So maybe this midpoint is all we need to go for of the previous year's range. Again, just being very basic about it. You go 550 to 11, that's a double. But if you break through 11, can we get 18? I don't know. I don't know if we can get that high. Peloton's been beat up. It's been a very, very beat down business. So I would say if you try an opportunity like this, if you try 550 to 11 or something like this, 6 to 12, don't put a whole lot on it, right? Do something that you're not. 100 shares is not a whole lot there, and you can kind of sleep at night and just let it do its thing. 50 shares, 100 shares, whatever shares you want to do. But just because this thing's been beat down for a reason, it may never come back. But if you're patient, there's always that fool's gold rally that can happen. Something like we started last year. We started last year at 8 and went to 18, and we did it, boom, got everybody excited, and then left them holding the bag down to 4. That hopium trade can tend to happen in Q1. So can we get a hopium trade and then tumble our way back down? You know what I mean? So some thoughts right there on Peloton. But if you can get through 7 with some juice, with a G squat, you open up the upside in a big way. Last one here, SoFi. SoFi here. This is one that Mina posted a little bit earlier. A great one because it has a rounded bottom accumulation pattern. For those of you not familiar with these types of patterns, they are the most explosive patterns. And one of the things we did back at Nirvana Systems, my last company there, was we basically created a whole database going back decades and decades and decades of all the various types of chart patterns that you can come up with in all time frames, from 1 minute all the way up to monthly charts, And then you had this huge database that showed you, okay, when you have something this size, the odds of it working out are this, and the distance is this, etc. And because an accumulation takes so long to develop, the eventual expansive phase is more explosive because you have more juice there. So these are tremendous patterns. That's why we focused on some of them here to begin the year. Mina brings this one up. It's a great rounded bottom as well. It's been in this range for a while. It's stuck around $8. The high end is about 12. The low end is about 4. That's your range. So you're right at the middle of this range. You're right at the middle of last year's range, right? That's the midpoint. That's the high. That's the low. Can we get through 12 at some point and open up some upside? Ideally, you'd like to say yes. We've been stuck in this range for 2 good years. We could be stuck a whole nother year. So something like this, again, it's hard. It's hard to really tell when they can get going. Through 12, though, you start to open up some upside in a big way, and you're back into this previous distribution. The previous close here is 10. How far down do we go? Do we get a retest of value? Can we get a retest and kind of squeeze to 12? 6 to 12? And then from there, you have a free trade, and then you can try to see if it can expand. Something like that could be in place. So rounded bottom, pull back. How deep can we go to begin the year? And then from there, maybe there's a free trade entry for an eventual expansive phase. So thank you for bringing that one to our attention. Man, over 2 hours for this monthly market outlook. If you made it this long, you deserve a medal. Thank you very much for joining me for an extra supersized edition of our monthly market outlook. I could go on for days and hours and hours and days and days and weeks if you just keep giving me charts, but I know at some point we got to cut it off. So thank you very much for joining me here today. The first one of the year. We'll look to do these here throughout the year as well. Again, if you want to know how to find me, you can go to pivotboss.com. You can also find us in the PivotBoss trading room, ecofin.pivotboss.com. There every day, a lot of great education at your fingertips, a lot of great traders there, a lot of great action happening all the time here. So again, a lot to get to here to begin the year. Hopefully we get some great action. A lot of great key ranges here that could provide some surprising free trade opportunities down the road. So we'll see how this plays out. Again, thank you very much for joining me. My name is Frank Ochoa, author of the book Secrets of a Pivot Boss, and very excited to have you here this evening. Everyone have a fantastic rest of your day, and I'll see you soon. Take care.